Hey guys, Stock Saturday, and it's a green week, reasonably good, about 2.7% up for the week, or about £7,000. This is sort of largely down to gold and silver, it seems, because a lot of stocks in here certainly are down. Stellantis, Broadcom, Taiwan Semiconductor, all sort of down a percent or two, a couple of percent for Stellantis, and yeah, some of the sort of smaller stocks are slightly down as well. Nothing moving sort of too much, but yeah, it's slightly worse than I'm showing as well, because the tracker doesn't take into account of after hours, and obviously my largest holding being Cleanspark. They took a bit of a dive after hours on Thursday night, so they are up 7% for the week, which has provided sort of a reasonable amount for the gain. And then they dropped 10% because of a dilution announcement. Sort of been expecting a reasonable amount of dilution going forward as they sort of look to expand. Maybe not quite so much. I think it's $800 million. Obviously, that makes less of an impact at $20 Cleanspark than it used to at sort of $4, but people still sort of unhappy with it. So I have, including this 10% drop, I am still up 2.7% for the week. So I thought that was quite good, considering the S&P is up 0.23% for the week, and the Nasdaq is down 0.2%. So yeah, pretty happy with that. So a relatively short update this week because there isn't a huge amount of news. Just sort of having a quick look at the annual report for Process. I don't sort of cover these all that much because it really is just a proxy for Tencent for me with a little bit of discount, and it's sort of been slightly outperforming over the last year. They've been doing buybacks, sort of 16% reduction in the discount between sort of their NAV, net asset value, and share price. So they sold about 3% of their 10-cent holding, or reduced down from 29% of 10-cent to 26, and they've been doing buybacks with it. So $10.5 billion dollars worth of Process and Naspa shares since June 22, going back sort of a fair little bit of time. But yeah, it's certainly providing sort of a little bit of bump for the stock. You can sort of see in the last month, Tencent has been outperforming a little, but over the last sort of 3 months, Process sort of doing a little better. I've taken the dollar denominated stocks for these two just to keep currency the same. And over the last 6 months, so Process has been sort of outperforming quite a bit with these buybacks. Over the last year, even more so, 10% down versus 22% for Tencent. So yeah, it's going reasonably well. Over the last 2 years, 20% up as opposed to 20% down for Tencent. So it's not doing too bad. It's sort of not a huge performer for me, but if I'd held Tencent directly, which I would sort of rather do, then I would have been worse off. So fair enough. They are making sort of more investments in other things, as they always do. They're sort of still very, very big in sort of emerging market food delivery. That's their biggest non-Tencent item. Payments and fintech as well. Been seeing some people sort of on the Discord mentioning Remitly. They own 21.5% of them, so quite interesting. And then sort of 100% of some of these other companies, smaller people, again more focused on emerging markets, which they do see as sort of the big growth sector. But some of their other businesses not been doing so well. They own 100% of Stack Overflow, sort of coding message board really. and sort of it was a good place to ask questions and sort of get help and tips on coding things, and that's been sort of eaten away at really by AI. You can sort of ask ChatGPT to help you out with things like that, and the results are pretty good. So yeah, some of their investments obviously don't always go so well, and they are loss making, so that is part of the reason for the discount, I'm sure. But they want to make overall these businesses profitable by 2025, they're saying. And just to note, they are still quite heavily focused on India, obviously the largest population in the world now. They've overtaken China and are still growing, as opposed to China shrinking in population. And yeah, quite a high unemployment rate, but also fairly high GDP growth rate and relatively high inflation. But I suppose that's what comes with a growing economy and sort of a less sort of stable economy as opposed to sort of your US and UK. But yeah, they're sort of saying fintech markets, the buy now, pay later could be big, retail, and sort of all sorts of things growing in India. India is doing pretty well as a stock market, so yeah, to have some sort of venture capital and sort of small company investment in them, I don't mind too much, even if it is sort of not quite yet profitable. But yeah, I don't have sort of any exposure at all to India other than my Vanguard Emerging Markets ETF. So yeah, I don't mind a little bit of this in process as well. So just highlighting the gold and silver is sort of pushing up my portfolio at the moment. The miners sort of suddenly starting to get some life breathed into them. I think people have sort of finally admitted that gold is doing pretty well. I think it rose certainly on the futures a little bit beyond this. I think it's about 22.54 after the end of play, and yeah, been sort of doing pretty well over the last week, and sort of certainly over the last few months. It's reached new all-time highs, so people are pretty happy with that. Obviously, costs have gone up with inflation, so I do see a lot of people sort of comparing this to 2009 prices of gold and sort of saying we should be way above those, but obviously, as I say, all-in sustaining cost is considerably higher than back then, and even considerably higher than a few years ago at the sort of gold lows. So yeah, it's doing pretty well, but maybe not the sort of massive run up that everyone's saying should come almost immediately. Noticing as well, silver still sort of doing okay over the last sort of few months, but lagging gold to the point that on the gold and silver ratio, we are sort of trickling back up again. Probably best to ignore the 2020 highs because that was a rather crazy period. But you put it on the 3 year, it sort of peaked around 95 in the September 2022 time. Sort of come back down, but has been steadily rising up again and has sort of hit just about hit 90. So yeah, you would expect in a gold and silver bull market, normally gold would outperform, and then at some point during the cycle, silver would start to outperform and sort of really rocket up. And I think everyone's expecting this ratio to come sort of back down more towards maybe the 60s, and the super bulls are sort of going back to the fact that it's about 8 or 9 to 1 ratio in the ground. I don't think that's quite the metric we should be using because they have different demand and different use cases. But yeah, certainly if we sort of saw gold rise to say 2,400 by the end of the year at a 60 to 1 ratio, you could be looking at $40 silver on the sort of bullish side by the end of maybe the end of next year. So yeah, we'll have to see. But I still like my silver sort of side of the miners as well. We do have next month the revised version of this report as well, the Silver Institute's survey. This will give the final results for 2023 and a sort of forecast for 2024. I'm not quite sure why it takes so long to have an actual 2023, but they seem to only do sort of 2 per year, so that's what you get. But this was the 2023 forecast. Total supply sort of slightly up from 2022, but is broadly flat over sort of the whole last decade. It's slightly down on 2014 actually, so it's not really going anywhere, which is pretty good considering demand is up. So you can see sort of industrial demand has been sort of steadily rising, rose 5% in 2022, 4% in 23. Again, that's forecast. And the sort of one of the main drivers of this is solar. So photovoltaic panels. You're looking at 100 million ounces in 2020, 110, 140, and then forecast 161 for last year. I think there are a lot of reports that this has actually come in at about 180. So yeah, you're looking at sort of 28% growth, and then probably more like 25% growth, which would be good. And it's sort of projected to keep growing. Everyone seems to be wanting more solar. So yeah, there's obviously amounts that could come down from elsewhere. I think people sort of assume everything else will stay the same and photovoltaics will just continue going up, and use more industrial uses in the sort of electric vehicle side and sort of various other industrial uses. But you could see sort of coin and bar demand drop, for example. That's your sort of net physical investment. That's been quite high. I think some of this is linked to India. But yeah, you could see industrial sort of grow and physical side drop a little. But overall, it still looks pretty good. Market balance sort of is in deficit, and yeah, less the net investment in exchange traded products. So this is sort of money flowing in and out of the physical ETFs and that sort of thing. You are actually looking at a deficit for the last 5 years, which is sort of rather surprising. Again, some of this is sort of still in existence, of course. It's not as if it all gets used up, so it could come back into the world if silver suddenly rockets up. But yeah, certainly sort of 5 years of deficit, probably most likely 6 years, including this 2024 number that we'll get next month, is pretty good. You can't have a deficit forever, so still very, very bullish. And economic news-wise, there was almost nothing this week. You had sort of revised GDP numbers for the UK, but this is for Q4. Obviously, we're nearly going into April 2024, so that's very, very old news. Yeah, jobless claims basically for the US, sort of where they were expected. And then, of course, it's Good Friday today, but you do get the all-important US PCE inflation data and core PCE and sort of everything the Federal Reserve likes. So this is always lagging behind CPI, but it's what the Fed focus on. So is very, very important. It's forecast to be sort of broadly the same as last month. Core PCE year on year. 2.8%, same as last month, so it's not really coming down. And headline PCE is expected to rise 0.1%. So yeah, interesting. The market will be shut and we'll get this news come out. So you have to wait till next week to see if it has any effect or if people have forgotten about it by then. So yeah, just going back to the portfolio, as I say, gold and silver has been sort of helping me along. Coeur Mining sort of up about 11%, Equinox up nearly 12% for the week, Fortuna up about 9%, and then yeah, all the rest sort of not doing too much. Riot Platforms up ever so slightly, sort of been trickling a little amount into there with dividends from the invest account. And obviously we've got the new ISA season opening shortly, so I am considering making rather a big decision on doing a bit of capital gains tax gain harvesting, and yeah, if I were to put that in the ISA, wondering whether I would sell Bitcoin and buy Riot platforms rather than sort of Cleanspark. I will try and do a comparison video on those two. I wasn't feeling that great last week, so I left that. But yeah, certainly leaning more towards Riot at the moment, so I could sort of diversify ever so slightly in my crypto mining portfolio, if you like, a little mini crypto mining portfolio of two, and yeah, that'd be interesting. Just looking at the interactive brokers side, so Pan American Silver doing pretty well, up about 9% for the week, and yeah, KGHM not getting a huge amount of love because that is mainly linked to the copper price, even though I sort of partly like it for the silver side, but yeah, we'll see how that goes. And on the option side, things have been really picking up. Obviously, the Cleanspark is sort of doing okay. That'll drop back down Tuesday. I think the market's not open Monday as well, so Tuesday that'll probably drop down unless Bitcoin rises up before then. But the gold and silver miners are the ones really starting to move, I think, because no one ever expected them to go up. So yeah, you can get a gain on Cleanspark if it really motors along, but it doesn't actually take that much of a gain in the gold and silver miners to move the options. So as you can see, I'm sort of over 100% in the green on the Core mining options now, from very little rise in the share price, and I did buy a lot of Equinox sort of higher than they are now, so I averaged down a little, and that's up 57%, so pretty good on that. Himax still sort of at quite a cheap price. I don't think there's too much expectation that they'll do well. They maybe not if China's in a recession, and yeah, they are sort of largely linked to China, so yeah, that one's still a little bit speculative. I'm hesitant to sort of be piling in too much to those, but it's tempting because I've got my 2,000 quid here, and there isn't a huge amount else that I really want to go into. The Riot platform's options aren't sort of particularly appealing, even if I think the stock is. So yeah, we'll see. So let me know what you guys are buying. If you got any suggestions for me, and like and subscribe. See you soon.